So let's talk about Bangladesh's financial system. Right now, it's standing at a major crossroads. And for any executive watching the region, this presents both some pretty deep-seated risks, but also some really significant strategic opportunities. In this explainer, we're going to break down the threats to its stability and really explore the paths that could unlock the country's next big phase of growth.
And that brings us to the central question, doesn't it? The one every executive eyeing this market has to be asking. As Bangladesh pushes hard towards becoming a middle-income country, we have to wonder, is its financial architecture actually built to support that ambition? It's a question of stability, for sure, but also of forward momentum.
All right, here's how we're going to tackle this. We'll start by diagnosing the strain on the banking system, which, as you'll see, reveals a critical gap in the economy. Then, we'll look at the capital market as a strategic solution, lay out a blueprint for reform, and wrap up with what the path to long-term stability really looks like.
Let's dive right in with the foundation of the country's economy, its banking sector. I mean, it's fueled some incredible growth, no doubt about it. But that very foundation is now showing some serious signs of pressure, and it all stems from one single critical issue.
That issue is non-performing loans, or NPLs. You've probably heard the term. But put simply, an NPL is just a loan that stopped making money for the bank because the borrower isn't paying it back. This isn't just some line item on a balance sheet. It's a direct and constant drain on a bank's financial health.
And here's where it gets truly dangerous. It's the systemic risk. When NPLs get this high, they don't just weaken one or two banks. They create a risk of contagion. The potential failure of just one institution could literally trigger a domino effect across the whole financial system. That is a vulnerability you just can't ignore.
Now, the problem isn't exactly the same everywhere you look. We're seeing some pretty stubborn governance issues and, frankly, poor performance in key development financial institutions. But at the same time, there's a real bright spot. The Islamic banking sector's actually seen robust growth, which tells you there's strong market demand out there for different kinds of financial models.
So what happens when an entire economy leans too heavily on a banking system that's already strained? Well, a critical gap starts to emerge. And that leads us directly to our next point, the country's underdeveloped growth engine, its capital market.
This chart, wow, it really puts the scale of the issue into perspective. In Bangladesh, less than 1% of corporate financing comes from the capital market. Just think about that. Now compare it to about 15% in neighboring India or a massive 75% in the US. We're not talking about a small gap here. This is a fundamental structural weakness. And this weakness has very real consequences. Just take a look at the Dhaka Stock Exchange Index from late 2024. You can see all that volatility, that downward pressure. It's a clear reflection of low investor confidence and a market that just can't provide stable, reliable funding right now.
The end result of all this is a classic and very dangerous asset-liability mismatch. You've got companies being forced to use short-term bank loans to fund their big, long-term projects, and on the flip side, the banks are borrowing short from us, the depositors, and lending long to businesses. It's a fundamentally risky model for the entire system.
Okay, so this brings us to the strategic solution. To de-risk that banking sector and actually fuel sustainable long-term growth, Bangladesh has to cultivate a robust capital market. This isn't just some nice-to-have alternative, it's a strategic imperative. And the advantages are just so clear. With bank borrowing, all the risk is concentrated in one place, the bank. In the capital market, it's spread out among thousands of investors. Bank loans are short-term, while markets provide patient, long-term capital through things like bonds and equity. And crucially, when a company goes public, it enforces a much higher degree of transparency and accountability.
This quote from our source material really encapsulates the whole vision here. It's positioning the capital market not just as a way to get funding, but as a powerful tool for building a more resilient, more sustainable, and ultimately a more balanced financial ecosystem. So we've established the destination. We know where we need to go. But what does the roadmap actually look like? Let's dig into the practical steps, the blueprint for reform that's needed to unlock the capital market's true potential. The whole strategy really comes down to 5 key pillars. First, making it easier for good companies to go public. Second, you have to rebuild investor confidence through consistent, predictable policies. Third, rethinking the tax structures to be more competitive. Fourth, enforcing much stricter corporate governance. And finally, building a smarter, more informed investor base through financial literacy. And look, this isn't just theory. The Bangladesh Merchant Bankers Association has already put forward some very concrete recommendations. They're calling for consistent policies, way less red tape for IPOs, and just better communication between regulators and the industry. And importantly, they're advocating for getting the big corporations and even state-owned enterprises to list on the exchange. That would add some much-needed depth and stability to the market.
This brings us full circle back to that strategic imperative. When you look at the diagnosis of the problem, the solution we've identified, and the proposed reforms, they all point to one clear path forward for Bangladesh's financial future.
Ultimately, if there's one thing to take away from all this, it's this. Moving away from an over-reliance on the banking sector isn't just an option anymore. It is absolutely essential for long-term stability. The only way to ensure Bangladesh's growth is both sustained and resilient is to build a balanced financial ecosystem where both banks and capital markets can play strong, complementary roles.
The nation's economic ambitions are crystal clear, but the critical question that remains is whether its financial architecture will evolve quickly enough to support that climb. And the answer to that question will likely determine the country's entire economic trajectory for decades to come.